The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Thanks very much for joining the Navartis in partnership with Brookson IR35 webinar. I'm just sort of making sure that everybody can hear me okay. We're going to start in a moment or two. For those that have logged in and ready for the webinar, if you can just put a yes or a thumbs up in the questions box just to make sure that everybody can hear me. I suppose today this was an arrangement between Navartis and Brookson for the senior management team of Navartis, the directors Jim and Justin, in terms of helping support the Navartis contractors with the upcoming IR35 changes. We'll go through a little bit about what happened in the public sector and how we worked closely with Navartis and Brookson in terms of some public sector clients, and also a little bit in terms of the key IR35 metrics. So I'll just keep it on for another 30 seconds or so, just to get the last few people registered for the webinar. If everybody can hear me okay, that's brilliant. Hopefully we've got everything in order, and we'll kick off in the next 30 seconds or so. Yeah, I've got quite a few more registered in there now. So yes, so thanks again. Really appreciate your time in joining today's webinar for Navartis specific contractors in partnership with Brookson. We've been working together for a number of years in working together and supporting each other in terms of legislative updates. And I suppose the ominous I-35 changes this coming April is the reason why we're doing the webinar today. Probably give you a soundtrack of about 40-45 minutes. Please do ask any questions throughout. There is a questions box online, so please do keep the questions coming through. I've got my colleague alongside me who'll be chipping in throughout the slides to be able to answer any questions, and also we'll ask some questions live on air. But please do ask them throughout. In order, I suppose, of what we're looking at today, Navartis would like to offer I-35 advice to all of its contractors. Navartis, working in partnership with ourselves, Brookson. I think what would be key would be starting with what is I-35 and the key indicators. We'll also be looking at take-home pay calculations and case studies, the learnings that we went through a few years ago in the public sector, the private sector changes that are due in the next few months, and the umbrella options to consider post-April of this year. I think that's a typical agenda point that Navartis would like to cover off over the next 30-40 minutes. And working in partnership with Brookson, we'll guide you through, hopefully giving you some advice, support and education around the changes. So I'm Michael Howard, Relationship Manager for Brookson. As I mentioned to you, I've been working very closely with Justin and Jim and the senior management team at Navartis over the last couple of years. And I suppose the reason why we work very closely together is that we work together in terms of supporting each other and supporting contractors and clients when legislative changes arise. And for those that have been career contractors, there's been a number of legislative changes over the last few years. Just a little bit on Brookson, for those that use us, you probably already know some of this. For those that don't, and the reasons why we partner with Navartis is that we offer compliant FCSA solutions to different types of freelance contractors. We offer umbrella, limited company and CIS arrangements. In terms of one of the arms of the Brookson Group, which has been fundamental in working very closely with Navartis over recent months, is our Brookson legal business. So Brookson within the group have got a legal division which helps support contractors and clients in terms of the requirements for I-35. Within the Brookson Group, this legal business has done over 100,000 I-35 reviews over the last 19 years, and we believe that our advice and support will help mitigate risk for the supply chain and add a lot of value to Navartis and its key clients and contractors over the coming months. We also help support quite a number of public sector bodies when these changes arisen in 2017, hence why we're working together in partnership to be able to support Navartis and their contractors over the next few months. In terms of IR35, so I think it would be very important to start as to the background of IR35 and why HMRC are making changes. So IR35 is commonly known as a piece of legislation which identifies disguised employees working through personal service companies or your own limited company. Now, this got brought in 2000, and what this meant was that contractors could get paid gross in the form of a limited company and then have the obligation and the decision and the risk of deciding whether they pay themselves pay-as-you-earn or whether they're subject to corporation tax and maximising their income in form of dividends. If there is any good coming out of I-35 and the changes arising in the next few months, is that I-35 isn't changing in terms of the key metrics that determines what I-35 looks like. So we've got 19 years of understanding what I-35 looks like, how it should feel, and what HMRC and limited companies should be adhering to work towards. Now, I'll run through the next couple of slides, which is key specific IR35 metrics, which as an individual limited company, you should already be understanding what these are, as your obligation currently sits with you to determine your IR35 status. So the first IR35 metric, which I'm going to start with, is control. So HMRC are not too concerned about what control you're under, when you're controlled, or where you're controlled. I think the big one that HMRC look at is how are you controlled. So that there's quite a lot of security requirements in terms of where you can provide your skills and what time the client are open. But fundamentally, how you carry out your skills and how you carry out your services to an end hirer is the crucial part in how this control element is understood by HMRC. If you're given a task, a specific project, and an assignment to complete, they're hiring you for your skill set to be able to deliver that in the best way possible. And in terms of how you deliver that, that should be left in the main down to you as a limited company to provide what is the best way for you to complete that role. If the client determines how you complete that role and has a lot of control in terms of monitoring, supervising and directing you on coordinating that role, then that for me feels a little bit more like an employer-employee relationship, and that would put you more towards inside I-35, which would mean PAYE tax and NI is liable. If you're deemed outside of I-35, then clearly you should be deemed yourself as a genuine limited company and self-employed. For those that can hear, I think the ice cream man's trying to take up some noise in terms of getting some business, so apologies if you can hear some noise in the background. Another key metric from an I-35 perspective is substitution. Now, this could be sometimes noted in your contract under personal service. So this again shows that you're in business on a business-to-business agreement. So are you in business between your limited company and your end hirer, or are you personally providing services to that end hirer? Now, again, there may well be some myths, there may well be some understanding, there may well be some education required around substitution. What substitution is there for is to provide that your limited company can provide business to your end hirer, not specifically you as an individual. So you, as a limited company, should be well within your right to exercise the right for a substitution who is adequately qualified and skilled to perform the work that's required. So if you, as an individual, have got other obligations to fulfill, other requirements to do, or you just simply can't make it to work, and you can exercise the right to provide a substitution who's at the similar or same skill set and will be able to provide the same work to the client, your limited company should be able to exercise the right to subcontract another worker to be able to provide them skills to the end hirer. Again, it should be within your contract for services. Again, your client should be allowing you to be able to exercise this right, but they don't have to accept this. You don't have to fulfill a substitution for this clause to be warranted as compliant. You just have to exercise the right to be able to provide one. So again, if you can provide a substitution, that again puts you more towards the outside I-35. If you can't provide the right for substitution, again, that puts you more towards an employer-employee relationship. Another key metric from an I-35 perspective is mutuality of obligation. So this again goes back to an employer-employee relationship, if there's an obligation to offer work, either additional work to what's already been pre-agreed or work afterwards, and there's an obligation to do that, then that shows to me like an employer-employee relationship. If the client has been hired for a certain role or a certain assignment, gets offered other work outside of that remit, there should really be no obligation on that limited company to be able to do that work. They can choose to do so with maybe a different purchase order, a different contract, or an amendment to a contract, but they shouldn't be obliged to accept further work or additional work from the client. That should be a choice from a limited company perspective. And again, whether you're inside or outside IR35 will depend on how you are obliged to work for that worker or not. Financial risk. This is another key IR35 metric that has been around for the last 19 years. And this again shows you as a business, are you taking financial risk? So do you get provided your own equipment? Do you get provided training? Do you get provided insurance by the client? And do you get paid regardless of whether the outcome of the work has been complete or not? Or are you working on the emphasis that you need to provide your own equipment, provide your own insurance, undertake work for the client outside maybe certain set hours to be able to provide the required outcome? Are you exposed to any financial or reduced risk if the work is unsatisfactory? Do you get paid for overtime? So there's things to think about here that places some sort of financial risk on you as a business as to whether that would put you more towards inside or outside of IR35. And I think the last key metric that we'll talk about today from an IR35 perspective is, as an independent freelance limited company, would HMRC be able to identify you easily as a different engager to that end hirer as an employee? So do you get employee benefits like staff discounts, car park, employee benefits, pension contributions? Do you have a different lanyard, a different visibility badge, a different uniform? Is there any differences that you have that would easily identify you as a non-employee of that organisation? And again, if HMRC was to come and sit with you, would they see key differences between the day that you do in the office and the day that an employer does in the office, or is there very, very similar working practices? And again, you've got to ask your question. If you're doing the same job as an employee with very little or any differences, why would there be any difference levels in tax payments being made? I know we've had a few questions come through, so I'll pick up on a few of them in the next few slides. So if you do have any questions throughout these slides, please just update them on the question slide and we'll get to them in the next few slides. In terms of the changes in the public sector, so for those that have got friends, colleagues, or know about the changes in the public sector, HMRC decided to change the way that I-35 decisions and responsibilities sat in 2017. So in the public sector, it wasn't the responsibility of the limited company to assess your own individual I-35 assessments and to therefore be the liable party for tax provisions. They moved the liability up the supply chain. So HMRC advised in the public sector that your TfL, your NHS, your local government and councils as the public sector end hirer would be the entity responsible for making the assessment of whether the worker's role would be inside or outside of I-35. In order to do this, the end client should take reasonable care in coming to that decision. As I mentioned to you a few moments ago, the way that I-35 statuses are assessed hasn't changed. It's just that the entity that's responsible for making these decisions has changed and moved up the supply chain. In addition to the end hirer making the assessment, the liability for tax also moved up the supply chain to the fee payer. So in your example, Navartis are the entity that are the ones that are paying you. They will be responsible for making sure that the right levels of taxes are being paid. Now, what that means in a nutshell is that if the end client determines the role to be outside I-35, it's then down to Navartis to make sure that the right levels of taxes are being paid. If they believe that the role is inside I-35, then again, Navartis being the fee payer will be able to make sure that PAYE tax is deducted at source and that all of the obligations for tax payments is made by them. In the public sector, HMRC didn't allow an appeal process from a contractor perspective throughout the year. They did, however, allow the contractor to appeal the decision at the end of the year on a self-assessment. Coming into the private sector in the next few slides, there is a slight change to this appeal process, but just to put your education into perspective, in the public sector, contractors did not have an appeal process apart from the end of the year self-assessment. In terms of what we learned from the public sector, end clients were very slow to react and were very unprepared for these changes. Workers were not supported effectively and communicated with, and I think this is where we're trying to move towards, helping contractors understand IR35 a little better, provide communications and clear updates on the changes, hence the webinar we're working today with Navartis for. In the public sector, those contractors that had cross-transferable skills moved to the private sector where these changes didn't actually apply and don't apply until April. For those contractors, for clients and agencies in need of any support on IR35, HMRC brought out an online tool to be able to help provide you with IR35 tests. It was called the HMRC Assessed tool, the Check Employment Status tool. And what this does, it's a free tool, and it just gives hirers, agencies and contractors a very brief overview in terms of whether your role should be inside or outside of IR35. The reason why there's been a number of debates and suitability over the assess tool is that it's probably had quite a lot of learnings to go through over the last few years. Up until recently, it didn't include one of the key IR35 metrics, which was mutuality of obligation. And also, there were end hirers in the public sector that used the assess tool that were then challenged by HMRC and proved that the assess tool was not fit for purpose. So there has been a lot of talk and debate over the assess tool. So our advice, and similar to Navartis's, will be to make sure that the decision that you have been given from your end hirer comes from a reputable IR35 specialist and somebody that understands what IR35 is. For those contractors that were engaged in the public sector working at NHS or TfL, they were the two big public sector bodies that had issues in terms of the off-payroll workers. Their initial stance from an IR35 perspective was to arrange for a blanket ban on all limited companies. So there was communications that went out early part of 2017 that stopped any workers engaging on a limited company basis. However, due to further education and support that Brookson were able to advise both public sector bodies, we educated them that probably wasn't the most commercially beneficial arrangement, and to retain and attract talent, they must understand IR35 isn't a blanket ban for everybody. So they now have got a slightly relaxed process to what they were previously when it came out in the public sector. Another key point that we learned in the public sector was the growth in umbrella uncompliant models. So for those workers that are deemed inside IR35, there are a few options for you to get paid into. The most common one being an umbrella solution, and given that umbrellas are on the rise over the last few months, it's worth noting that there are a lot of uncompliant umbrella models out there in the marketplace. So I'll talk to you a little bit more on another few slides about what an umbrella company is, but if you do see umbrella companies offering you 80–90% take-home pay, please be mindful that an umbrella engagement is a PAYE solution. So therefore you should have PAYE deductions made before you're paid into your personal bank account. And just one final one, HMRC expressed the term reasonable care should be taken, however they didn't define what reasonable care was. We're hopefully likely to get an update on the March spring statement. However, between now and then, all we're asking is that clients take reasonable care in terms of making their assessments. Just a question that's come through online before we go on to the next slide. I'll pass you over to Andrew, who's my colleague. He'll just read that out and hopefully be able to pick up that question that's come through.
Hi everyone. Nick has sent a question through saying our current contracts are outside of IR35. The rules regarding if you are in or out are not changing. The only change is the person determining the status from contractor to client. Therefore, our contracts will still be outside after April. Can this status be briefed to our client that they should determine us outside of IR35? and also explain to the client that any financial risk is with Navartis, not them.
Yeah, no, good question. Thanks, Andrew. Cheers, Nick, for the question. So I think just to get a little bit of clarity around IR35, so IR35 is in two forms. The first form is the contract for service between Navartis and your limited company, which would generally have IR35 friendly key indicators. And I'm sure that, you know, Navartis have been working very closely to have IR35 friendly compliant clauses in there. However, I-35 also looks at your working practices. So if you've got an I-35 friendly contract and your working practices are outside I-35, then you're quite right, Nick. Your status should really be outside I-35. However, if your client believes that your working practices may not be as strong or as robust as they possibly could be, or that there's elements within the working practices or contract that may be weak, they may take an adverse reaction to say that they don't want to allow limited companies to be engaged because maybe of lack of understanding or education. I'll come on to, I suppose, working practices changes and I-35 in just a moment. But in a good way, if you are doing everything you can now in terms of your contract and your working practices being outside I-35, and you're demonstrating them key criteria post-April, and your contract and working practices backs that up, you're quite right, Nick, you should still be outside I-35 from April. It just means that your client has got to obviously make that decision, not you. So in terms of the I-35 changes in the private sector, so we received draft legislation in the summer of last year. What that meant was that it gave us a starting point to look at these changes due in April of 2020. And the starting point was fundamentally the public sector changes. So all of them changes that I've already previously mentioned, whereby the end hirer make the decision, Navartis, the fee payer, are liable for making the right tax deductions, is a starting point from an I-35 private sector changes in April. There is one addition to what happened in the public sector. So this is something that we didn't know about until a few months ago. So if you are engaged with an end client that is described in the Small Companies Act as small, then all of these new changes do not apply. Your current obligations will apply, and you have the risk and you have the determination and status. So when we say a small company, this is defined as a Small Companies Act. The company that you'll be working for will have to pass two of the three indicators. So they'll have to have less than 50 staff. They'll have to be having a balance sheet of less than 5.1 profit, and they'll have to have a turnover of less than 10.2 in terms of turnover. If your end client passes two of these three tests, your current obligations and risks will apply, and you'll make the decision and you'll bear the tax risk should HMRC investigate. Now, I think that is a little bit of a red herring myself, because I've been doing this job for about 12 years, and a lot of end hirers that outsource freelancers are generally not classed as a small end hirer. So I think that's maybe a little bit of a red herring. But again, if you do any consultancy work as a bespoke piece of work, then again, you know, the exemption is there for small companies. So the obligations and risks on your end hirer should be providing a status determination statement or an SDS. Now, I know that speaking to Jim, Justin and the senior management at Navartis, some clients have either already made the SDS public knowledge and discussed that with Navartis and certain contractors. But I also know that certain clients are still keeping the cards quite close to the chest in terms of allowing what an SDS status is on certain workers. But hopefully we are getting towards the end of that decision-making process, and you as contractors should find out what your SDS is likely in the next few weeks. In terms of the SDS, this status determination statement should be taken by taking reasonable care. Your client should be taking reasonable care in making rational decisions and giving reasons as to how they've came up with that decision. Communication of the SDS should be passed down the supply chain to Navartis and Navartis contractors, and it also must include reasons as to how they've come up with that decision. Again, unfortunately, HMRC didn't standardise what an SDS looks like, they said that an SDS must be produced. So there may well be some different types of SDSs based on, the level of client that you're dealing with. Once the client has fulfilled that as an obligation, they then pass the tax risk down the supply chain to Navartis. Now, Navartis are the fee payer, and they're the ones that make sure that the fee is then paid to the limited company in its current format. If the SDS comes back as outside IR35, Navartis will have a look at the rationale and reasons behind the SDS, and if seemingly fit for purpose, they will continue to pay the worker gross into their business bank account. If the SDS comes back as inside IR35 and the client deemed the role, the worker and the working practices as inside IR35, then Navartis must make sure that PAYE tax is deducted. And I'll come on to the next few slides in a moment, but I think the most common arrangement is for workers, and we've seen this in the public sector, is to get paid via your umbrella company. Now, in a slight change to the public sector, private sector contractors do have a challenge process before any money is passed down the supply chain. They don't have to wait until the end of the year's self-assessment, which is what it was in the public sector. So if you get an SDS from your client, from your agency, HMRC have stated that you can challenge this process within 45 days and pass that back up the supply chain. Now, if I was a contractor, and a bit similar to the previous question that I read out, if you believe you're outside I-35 now and hence you should be outside I-35 from April, I would, in terms of that challenge process, have a robust process your end as a contractor and demonstrating reasons and rationale why you believe you're outside I-35. Whether that's because you've undertaken an I-35 review with a legal specialist or you've completed the online CES tool. At least some sort of defence process for you to demonstrate you're outside I-35. The risk definitely moves away from the contractor. So if there is positive news to come out of all of this for contractors, it means that the liability will not sit with you for any work done post the 6th of April. Clearly, if HMRC want to investigate any work done prior to the 6th of April where the liability sat with you as a limited company, then you do still hold that liability risk. Andrew's just got another few questions that's come in on the online question. So Andy, have you got a question there that you want to just flag up before we move on?
Yeah, there's one from Callum who asks, if the CES tool is free, why is it that we have to pay for the assessment, i.e. Hayes Skanska?
Yeah, I suppose the CES tool is free. Obviously, I mentioned that in the previous slide, and the check employment status tool is a free tool to be used by clients, hirers, agencies, contractors. However, if we think about what I-35 is, it's a review of the contract and the working practices. And I-35 has been going for 19 to 20 years. CES tool has only had 2.5 to 3 years worth of engagements. It's also been, as I say, had a lot of negative press because it doesn't seem to be fit for purpose in all avenues. And I think the CES tool still comes back in certain cases as unable to identify an outcome. So if you've got a tool that sometimes comes back as unable to identify is inside or outside, then in my opinion, it's probably not where it needs to be in terms of being robust enough to be able to give the rationale and reasons to the client and the agency and the worker on whether they're inside or outside. Maybe as we head into the next 6 to 12 months and CES gets reviewed, we may well be able to rely a little bit more on the CES tool. But we as a business believe that if your client are using the CES tool, there's definitely an option there to challenge that because of the previous cases that CES was used in a client arrangement. So to give you an example, the NHS Digital utilised the CES tool in the public sector, and when they got challenged by HMRC, they were fined £4 million because they threw the CES tool out of the window when it went to tribunal, and they said that it wasn't fit for purpose. So for me, use the CES tool as a very, very loose guide. But if I was a client, I would definitely be using an alternative approach to get expertise advice. So I suppose just a few case studies really, and hopefully these give a little bit of a tangible experience to you and the type of work that you do. So if we read these and just give you an example of how these workers could be inside or outside of IR35. So a client needs a quantity surveyor to provide specialist skills and support to help with new projects. It hires John to do work for 3 days a week on a certain 8 hours a day. The client issues John with a laptop so he can work at its offices sometimes, or some from home with their permission. And John reports to the PM and must follow the client guide. The client provides specialist equipment to John, and if John has to work longer than contracted hours, John will also be paid overtime. And John may work elsewhere on the days he's not working for the consultancy, but only with their agreement. Second type of engagement in terms of a case study is Bob. So for those that can see the slides, Bob is hired by a specialist subcontracting firm to provide project management services. Bob and the client have agreed a fixed price for the job and a date in which it must be delivered by. Bob can work from home or sometimes from co-working offices depending on his requirements, and uses his own equipment to do the tasks. And Bob is free to work for other clients but faces contractual penalty if he doesn't deliver the deliverables on time. This represents a significant financial risk to Bob if he fails to deliver the financial product as agreed. Now, both of these workers, you would continually say, do very similar work. However, in the terms of the top engagement, there's a lot of control, there's no financial risk, and also there's overtime being available if it's not being done on time. If the second engagement is provided on a fixed price and deliverables date, able to deal when they work from home or not, and able to work for other clients but will understand there's a financial risk, you can see that the first engagement is more deemed towards an inside IR35 assessment, and the second one is more deemed as an outside IR35 engagement. In terms of take-home pay, so I know speaking to Jim and Justin and the senior management team at Navartis, and getting quite a number of calls in terms of financial impact and the change in which your level of income may differ depending on the type of engagement. So I've tried to make these quite relative to hourly and daily rates that Navartis has got in terms of your contractors. So £30 an hour, if you're currently working as a limited company, you should be taking home in the region of £9.54. Working in the way of an umbrella via a pay-as-you-earn model, if your role is deemed inside, it's £772. So there is a significant difference there. If you look at £350 per day, there's about a £300 a week net difference in terms of take-home pay. £400 a day, again, probably about £400 a week difference in terms of net take-home pay. And again, for those that are on £450 a day, your difference again is about £450 a day. And the big difference here is the national insurance. So when you're working through a limited company, you've got arrangements to have additional shareholders, you've got pension contributions, you pay corporation tax, but your levels of national insurance are either very low or class 2 or class 4. When you're working as an umbrella, you're still paying PAY tax. However, you're also paying national insurance contributions as well, class 1 and class 2. So the big difference here is about 20% in terms of your difference in terms of level of take home. So, just to give you an idea of a financial illustration, the difference would be circa 20% in terms of take home pay. So a few more questions have come in just before I come on to the next few slides. Andrew, have you got any more questions there?
Yeah, so Nick has asked, are Navartis going to work with the clients to assist them with their production of the SDSs?
Yeah, so speaking with Justin and a few of the other management team at Navartis, they've been very, very proactive in terms of understanding these changes. They went through these changes in the public sector with some public sector bodies, and they are proactively working closely with clients to help understand what options are available for workers post-April, looking at whether SDSs can be determined now so that we can plan and prepare for the next 8 weeks, and also look at ways in which talent needs to be retained for that client. So Navartis are definitely proactively working with their clients to help their contractors understand the working engagement models from April of this year.
Another one from Matthew. I work through Navartis for a client in the UK, but I live and work in Canada. My company is a Canadian company. Am I correct in believing IR35 will have no effect on my working?
Yep, no, true. So I-35 is a UK tax legislation which impacts limited company engagements for UK tax payments. For work that's done overseas or engaged via an overseas solution that is not treated as UK tax and it's outside the UK tax system, then you are correct. People that work overseas, people that are engaged from an overseas entity, they have got to make sure their own levels of taxes are being paid from an overseas perspective. So, yeah, again, good question, Matthew. I think these changes are in the main affecting contractors that work, live and travel in the UK and have obviously got relative deductions to be made. But engagements made overseas, they're subject to overseas tax law. For those that are with us still on the webinar, I think we've got quite a high percentage in terms of numbers of people that registered, which is excellent news. And again, big thanks to the Navartis team for pushing this out over the last week or so to try and, I suppose, provide an education and a support to the contractors. For this slide, so if we look at the figures on this slide, they're based on £350 per day. So if your day rate or hourly rate is in the region of, then hopefully these figures make some sort of relative sense to you. So at the moment, in terms of your decision, from an IR35 perspective, because the decision sits with you, you're in the far left-hand side in that green column. Current setup, pre-April 2020, you're determining your role to be outside IR35. Of the 350 per day, you retain about 75–80% in your net income pot. You have about 20–25% of corporation tax and higher rate tax, and you've also BVAT registered where you've got an element of VAT. Now, where Brookson and Navartis have been chatting and meeting over the course of the last few months to build on the changes in the public sector to be rolled out in the private sector, what we want to try and, I suppose, understand is the changes that could be implemented by clients and agencies and contractors to be able to keep status quo. And like one of the contractors mentioned a few moments ago, if you're outside I-35 now, you should really be outside I-35 from April next year. That's true, and I suppose none of these changes want to impact the true, genuine self-employed. So what a number of end hirers are doing is they're implementing changes where possible. So where certain working practices and potentially some contract clauses are not as strong as they possibly could be or could be improved, they are implementing change now to be able to move forward post-April 2020 where it's status quo, where the cost of the labour remains at £350 a day and the contractor can remain outside I-35, nothing changes in terms of take-home pay. In addition to that, if your client has determined your role to be inside I-35 and you're subject to full pay-as-you-earn, then clearly there's going to be a different way in which you need to pay your levels of tax. And the most common one, as I mentioned, in the public sector, and the one that is definitely starting to increase massively in the private sector, is to get paid via an umbrella solution. What an umbrella solution is a PAYE employment model. So this is where Navartis will engage with an umbrella company. Brookson will then deduct your tax, national insurance on a pay-as-you-earn basis, and then pay you net into your personal bank account. And this, as I say, demonstrates that Navartis are fulfilling their obligation of making sure pay-as-you-earn is being deducted, and it mirrors the client's decision that an SDS has been made to be finding your work and your role is inside I-35. Now, as you can see, the cost of the labour will still remain at £350 a day because your job is still the same. All this means is that your client has decided that different levels of taxes and NI needs to be paid. So you've got employers' costs, you've got PAYE tax and NI deductions, and then you'll be paid your net income into your personal bank account. So there'll be no need for business insurance because you'll be employed by Brookson or an umbrella company to get your insurance. There'll be no need potentially for a limited company or an accountant. This is where you're paid as an individual through an umbrella company. For those that have engaged on an umbrella company in the past, I've got a few more slides in a moment to explain what the umbrella processes are, because there's been a few changes over the last few years. For those that haven't engaged with an umbrella company, again, hopefully I'll answer some questions that come through on the webinar that'll be able to highlight any changes that you may not be aware of. But before I get onto the umbrella side of things, I think two more questions come online, Andrew.
Yeah, there has. Peter asked the question, what does the £197 of employers' costs cover?
Yeah, good question. And I think this is something that a lot of contractors will need to get an understanding of, is that an employer costs, it's a bit similar to me as an individual here working at Brookson. My employer has got employer costs. So on top of my salary, they've also got employer costs. So your employer costs is your employer's national insurance of 13.8%. You've also got your apprenticeship levy, and you've also got your auto enrolment costs. So all of them are factored in to your employer's costs. You then have a net figure of what you'll be paid, and then your standard PAYE and employees' national insurance is deducted from that level of income, and then you're paid net into your personal bank account.
Carl asks, what about holiday and pensions, as we will be classed as an employee?
Yeah, true. So the good thing in working through an umbrella company is that your £350 a day will remain the same. So you're not going to reduce your level of pay. You're going to remain on a £350 a day rate, because Navartis will engage with an umbrella limited company as opposed to your own limited company. And when you get paid by Brookson and you get a wage slip on an umbrella solution, a part of your pay will be factored into your holiday. So when you do get paid, you'll get paid your holiday pay as part of your net pay each week. However, on the wage slip, it will demonstrate what part of that payment was due to holiday pay. Obviously, on the flip side of this, when you're off, you don't get paid, in a similar way to now being self-employed. When you're off on holiday, you don't get paid. So we do support you in terms of holiday pay and giving you notifications on the pay slip of how much of that net income is reliable for subject for holiday pay. Pensions, going back to that question, as an employee, you know, the pensions regulations changed a few years ago. You can opt in or you can opt out to contributing towards a pension. It's entirely up to you, but if you want to do so, you can.
So Nick asks, will Navartis rewrite compliant contracts and advise our clients on necessary changes to working practices in order for the contractor to be outside of IR35?
Yeah, I mean, I think, you know, working for Brookson for 12 years and I'm working through I-35 for the last 3 or 4 years very, very closely, I think that the contracts that Navartis have and the contracts of any other, I suppose, key agency are going to be very, very close to be as I-35 friendly as possible, because they also want to attract talent to be able to work for them. I think one of the main changes that need to be adopted by clients is the working practices, to be able to fulfill their obligations of feeling comfortable that they're engaging with workers outside I-35. Now, some of these working practices can be low-hanging fruit and can be easily changed overnight. So it could be a different colour lanyard, it could be a different type of email address, it could be a different canteen, it could be very, very small things. But there could be quite a lot of, you know, other impacts whereby working practices can't be changed overnight. And if the working practices don't demonstrate a strong I-35 blend, then it is a little bit outside of Navartis's hands in terms of being able to demonstrate that these workers are outside I-35, because fundamentally it's how you as a contractor engage with the end client. I do know that Navartis have been working very proactively with a number of their key clients in making sure that the retention and attraction of talent is a part of the client's thinking, because they want to make sure that they are an attractive client to be able to attract freelance workers for, and Navartis has been working very closely with their end hirers to demonstrate this point.
Peter also asks, is it mandatory for the employee to pay the employer's costs? Why isn't this an employer's responsibility?
Yeah, so again, good point. At the moment, when you are getting yourself paid into your limited company business bank account, as a limited company, you are choosing to pay employers or employees national insurance. You can structure your business in a way that doesn't meet certain thresholds, because you are the director of that limited company, you can pay yourself a small director's salary, which may not then, I suppose, reach certain national insurance thresholds. When you're an employee, like I am, my contract with Brookson means that I have got a salary, which deducted from that salary is employees and PAYE tax. What I don't see is the employer's cost that Brookson pays to HMRC behind the scenes. Now, when you're an umbrella employee, you are transparent in terms of what deductions you see. So your gross pay of £350 encompasses that extra increase in pay than what you would be if you was PAYE like I am. So you will see deductions on your umbrella payslip of both employers and employees' national insurance.
Carl asks a few more questions. The first, will a net income reduce then to cover holiday pay?
So when you get paid through Brookson as an umbrella company, your net income will be payable to you, including the rate that we pay you of £350 per day based on these illustrations. If you want to accrue holiday payments, then that's up to you. We know that contractors generally don't take holidays and they work as much as they can during the project. So an element of your net income is made up of holiday pay.
Carl also asks, I've done a quick calculation and found that on a £500 per day, after taxes, my net income will be approximately £1,266. I then need to take off expenses, so £500 per week, holiday pay, pension, vehicle running costs. My net income will then be reduced to around £450 per week. Would he be able to claim expenses through the umbrella model?
Umbrella companies do allow expenses. So if you are not subject to supervision, direction and control, you can benefit from certain tax relief and expenses. I obviously don't want to get too hung up on these illustration questions. There's a time to be able to get onto the next few slides, but if anybody does have any financial illustrations or specific questions, I'm more than happy to do that at the end or following on from this webinar. But what I'll do is I'll move on to the next few slides, which will hopefully drive in a little bit more questions aside from the financial deductions. In terms of recent case law, so this just shows that HMRC are taking IR35 seriously. So Lorraine Kelly currently works through a personal service company. She was reviewed by HMRC, and on all of the key tests, HMRC could not prove that she was an inside I-35 worker. So she was successful. Paul Hawksby, for those that recognise the name, it's Hawksby and Jacobs on TalkSport. He's been there for 16 years and he failed on the substitution clause. However, again, he passed on other elements of I-35, so therefore he was successful in his outcome. HMRC have got a very high hurdle to be able to pass I-35. They've got to demonstrate that all key metrics have not been met. We managed to find one, Goslin, Eads and Wilcox, BBC News reporters. They were very much controlled. They were very much under mutuality of obligation, and they couldn't provide a substitute. So they had 6 years worth of back tax, which after a tribunal, they got that £600,000 tax bill reduced to £300,000. So for those that have worked through an umbrella company before, or for those that haven't, clearly, if your status determination statement is deeming you inside I-35, whether that's the right thing for them to do or not, that's the decision that may have been made. The most convenient, suitable, and I suppose opportunity that was taken in the public sector, and we're also seeing this happen in the private sector, is for contractors to engage through the umbrella service. Now, this umbrella is an employment vehicle whereby they engage for services with Navartis and then pay the worker on a PAYE basis as an employee. There's no engagement for a limited company needed. There is no engagement for business insurance because you already get your insurance by being employed by Brookson, and there is no need for an accountant to do any work for this type of income. It's all deducted at source by Brookson and you're taxed on a pay-as-you-earn basis. Now, one of the questions that we mentioned before, can you claim expenses? You can. However, each umbrella company will have a supervision, direction and control test to be able to minimise any tax risks for both the umbrella company and Navartis. So again, if you've passed supervision, direction and control, you should in theory be able to claim tax relief. If you don't, then like myself, I'm an employee, I don't claim tax relief from my house to work. One of the other benefits of working through an umbrella company is that you get continuous employment, which can help with multiple temporary assignments for when you're going for credit or mortgage, pensions, etc. Now, Brookson, as part of a umbrella model, are able to provide you with indemnity and liability insurance working through Brookson Umbrella. We also provide you with access to a free legal helpline for services regarding insolvency, wills, probate, etc. Your pay date will remain exactly the same as what it is now on your limited company. So Brookson, even though we will be in the supply chain, we will pay you the same day that we get paid from Navartis, so you won't have to wait extra time to get paid. Benefits for Brookson is that we also offer a financial services division. So within our Brookson group, we've got a financial services team which provides advice on pensions, mortgages, and any other tax efficient way of you minimising your tax liability. So one of the main benefits is that you can put a proportion of your wages through the salary sacrifice scheme. Now, we don't just listen in terms of how much money you would put into your pension. Because we're regulated by the SRA, we've got specialist financial advisors that can advise on your specific income and your specific circumstances on what percentage of your income would be best advised to put through a pension. So again, please do look at that as an advantage in terms of minimising your tax liability. In terms of timetable for action, well, hopefully today's given you a little bit more in terms of knowing the facts and reduced a little bit in terms of the myths and the concerns that contractors has had. Brookson and Navartis are working closely alongside your clients to educate them, support them regarding these changes. Your clients have an obligation of making these assessments and providing an SDS. So Navartis are working very proactively to speak to your key clients in understanding what the SDS decision is likely to be. I suppose the quicker we can get that SDS, the quicker we can plan to move forward from April. And I suppose your plan is, contact Navartis to understand what options you've got when your clients provided you with an SDS. I suppose in a nutshell, if the SDS is deemed as outside, it should really be business as usual and remain as the status quo. If your SDS has come back as inside IR35 and PAYE is required, then obviously it'll then be looking at engaging and getting paid via an umbrella engagement to make sure that PAYE is deducted. In summary, changes will be coming in the next couple of months. We're due to get the final confirmation of all these changes in the spring statement in March. We do anticipate this being a change programme for hirers and fee payers to be able to adapt to these changes, and that goes back to the reasonable care question and the working practices that was mentioned earlier on. Hopefully we'll get a little bit more clarity from HMRC in terms of reasonable care and how clients should demonstrate reasonable care has been taken in making the SDS. Brookson are working closely with Navartis, given our legal background and support, to help provide and educate clients on what the talent impact could have if they make the wrong statuses and they don't understand the requirements of their obligations from April. And what I would say is your options post-April, make sure you're well set up in advance. Don't leave this till the last minute. If your SDS comes back that you need to get set up in a certain engagement, please do make sure that this is acted on as swiftly as possible. What we've seen in the public sector was, contractors didn't get their engagements in time, contracts need to be signed, engagements need to be in place, and there was delay on payments that happened in the public sector. Act as early as possible. Clearly, in certain cases, there may well be a little bit of negativity around certain decisions, but it is of the utmost importance for you to act quickly to be able to minimise any disruption. I know we've had questions throughout. Before we finish, Andy, is there a few more questions that that's come through that you want to just ask, one or two, and then we can obviously sign off and hopefully sort of finish with the slides. Is there any more questions that's come through?
Yeah, so Russell asks, if the client we are contracting to confirms or deems all contractors are outside, do we need to review our situation, even if we may be more likely to be John's case in the case study?
I think for me, once the client has made their determination, this is then down to Navartis to be able to understand what process has been taken, what steps has been taken to be able to come to that rationale and decision. So again, if your client has made a decision, it's then down to Navartis to be able to have communication with you to determine how you get paid post-April.
Steve asks, I work on multiple assignments. If one is captured, the other isn't, do I have to use an umbrella for both?
Good question. No, is the answer. Clearly, some people will still need the use of the limited company for retained assets or other types of financial income. So you can put one assignment through your limited company, and you can put other assignments through your umbrella that are deemed inside and outside of IR35. So I suppose, yeah, Brookson have got a service whereby we can facilitate that. So we've got a service whereby we offer limited company and an umbrella service, so you can flex between the two solutions without having to pay to management or accountancy fees. So there's an option there for you to be able to do that. But as I say, in the main, if you do only have one assignment and it's deemed inside or outside, then you would go with that decision. I think for those that have got multiple assignments, then it's a case-by-case basis.
Okay, Matthew asks, post-April, can HMRC fine me for an incorrect IR35 assessment?
So post-April, the liability of tax will sit with Navartis as being the fee payer. All tax liabilities from the 6th of April onwards will sit with your fee payer being Navartis. Any previous tax liabilities that will be subject from a HMRC investigation will sit with the individual limited company. So this is what HMRC have said, is that if contractors move to the right type of PAYE engagement from April, they are not proactively looking at back taxing contractors. However, what HMRC do, I'm not in control of that, but what I would say is this is time to have a fresh, clean start and to make sure the right levels of taxes are being paid, whether that's genuinely self-employed or whether that's on an umbrella employee basis.
Another one come through here. Can I pay into a pension of my choice through an umbrella? If so, is the gross pay taxed before pension contributions taken into account?
Yeah, so I suppose this goes back to Brookson's umbrellas benefits, is that as an umbrella company, it's typically an employed PAYE vehicle. Brookson within the group have got a financial division, and within that financial division allows you to put pension contributions through your salary sacrifice scheme. So it helps minimise the tax liability that you're subject to pay. So again, if an element of your income currently is put through a pension and you still want to look at the option of putting money into a company pension, then Brookson are in a position to help you do that. So there is an option for Brookson. As I say, it isn't the standard because we have got a financial division team, but we can help you do that. I'm just conscious of time. I know that obviously we've been on for quite a while now. I think we've got one final question and then I'll sort of wrap people's time up, but I'll do thank you for your time, everybody.
Are blanket bans on PSCs legal?
I suppose in the public sector, HMRC didn't say whether that was legal or not. They said that the client had to determine whether roles were inside or outside. For those that are quite eagle-eyed and clued up on IR35, there was an actual leak from HMRC last week that was put on social media that said that reasonable care does not quantify a blanket ban unless they've assessed every single role. However, that leak was then removed from the social media website within 24 hours. So in my opinion, if you blanket ban, you're not taking reasonable care, and we should get further guidance in March in the spring statement to clarify what that is. But in my opinion, a client should approach each off-payroll worker and assess whether that role is inside or outside and not make a blanket assessment. So thank you all very much for your time. Thank you again for all of the proactive questions. Just want to say a big thank you for Justin, to Jim and to the senior management team at Navartis for being able to promote this webinar hosted by Brookson and Navartis in partnership. Hopefully it's helped give you a little bit more clarity on the changes that are due in April. And as I say, we'll link back in with Navartis after this to be able to answer any unanswered questions that has come in, and also to give them an update on the number of attendees that joined us today and the ones that registered but weren't able to attend. We've got a recording of this as well, so hopefully we'll be able to send that over to Navartis for any further ones. But thanks again for your time. Hopefully you've enjoyed it, and any questions on the back of it, please please get in touch. Cheers now. Bye-bye.